Well, welcome back to another edition of Commodity Chat from Trader PhD. I'm head of market content, Dawson Schmidt. Joining me again for a conversation this week, Ag Market Advisor Nick Lawrence.
Hello, everyone.
Nick, last week we were talking heavily about global corn stocks, global corn production, and of course, the Pro Farmer Crop Tour was finding things a little bit below average. And then, on Friday, we did see the conclusion of the crop tour and what Pro Farmer was finding in the fields versus coming up with their own estimates. And so, final results day with that crop tour, of course, looking at corn here first, was the crop tour did find U.S. corn yield potential at 173.2 bushels an acre compared to 182.7 last year, as well as the three-year average of 178.6. Something that they did note too is that lower ear population, shorter grain length, and inconsistent field performance, those were cited as the primary reasons for the limited potential in a number of areas. And so, while the tour is, coming up with an official timeline, it's likely that the USDA its forecast could maybe come down, but essentially, Pro Farmer is projecting a little bit of a yield cut compared to last year as well as average. Kind of what are your thoughts on that? Any surprises to you?
Yeah, definitely. I mean, I won't be shy about it. I think I was surprised. I think basically everyone was surprised that get that big of a um, or that small of a yield number. I guess I should put it that way. Just given given what producers have been telling us, given what other what satellite data had been telling us, and things of that nature, the vast majority of the market, I believe, and we can see it in the price action, was and is caught off guard at the potential of such a low yield number.
Yeah, definitely. And, two coming in, I'll just rattle off the soybean numbers. The other surprising thing to me was, looking at soybeans. The crop tour didn't seem to find too disappointing on the yield side in terms of totality. They actually came in with yield potential of 53.3 bushels an acre. That's higher than the USDA's current 52.7. That compares to their estimate of last year of 53 bushels an acre and their 5-year average of 52 and a half. They were seeing some soybean fields that did show pockets of strong potential, but still again looking at targeting that late season development that was still going to be happening after the tour. And I think the surprising thing to me, especially, was if you look at the soybean pod comparisons, pretty much every state except for Minnesota was, lower than a year ago, some of them lower than average, and yet they still, doing all their calculations, doing all their considerations, came in with a higher yield estimate than compared to last year and average.
Yeah, that definitely threw the market for a loop. I mean, the entire week we saw nothing but lower yield potential, which got the market excited that, hey, maybe this balance sheet will actually start to tighten up, and given the demand that we have and the potential for El Nino and all those types of things, really had the market excited and running. And then they come in with the actual yield number, and the market, okay, wait a second, maybe we, we're not going to tighten this balance sheet up. Maybe it's going to continue to grow, or maybe at least stay the same. So yeah, definitely threw the market for a loop.
Yeah. And I mean, going back to these corn numbers too, we were observing the tour numbers throughout the week. Again, everything coming in below last year, below average, and the same came for, their Friday estimate for the total national average. We continue to see just these problems in the western side of the Corn Belt. Things are looking decent towards the east. Of course, just targeting, the Dakotas, Nebraska, Kansas, even Minnesota, Wisconsin, coming in with below average crop conditions. And, come Monday, we already got that another 3 percentage point cut in U.S. corn conditions, primarily driven by those issues in the West. And so it just, it largely seems like an East-West divide, but in totality, the crop tour was also seemingly finding things that were also below average the further east you go.
Yeah, what a mess, right? I mean, I think every little region has their own specific issue, whether it's dryness or maybe poor planting conditions, or maybe it's too much rain in some areas in season. I mean, it's just an absolute mess. And these crop conditions, I think, are they're going to start being taken, I think, with a little bit of a grain of salt, just because of just the general trend in the harvest from this point moving forward. I think the market's going to take that into consideration, that generally we start degrading until the combines run. So definitely a mess. And I think really the a couple podcasts ago, we were highlighting it's data season for the market. What data do we have to chew on? Less speculative, more speculative as far as weather, and those types of things. And really, it's data time. And so we've had in August WASDE that trim yield. Then you had Crop Tour, who ground truth that yield cutter, gave validity to it. And so then now this September WASDE, I think, is going to be extremely pivotal, just because now you're going to start looking at USDA plot data. And so I think less and less eyes are going to be looking at these conditions, and more eyes are going to be looking at this data.
Yeah, I mean, my mind would go to, where does the USDA take this? And I know they don't necessarily, they're not waiting for that pro farmer tour to come in and then they adjust their estimates accordingly with what they're saying. They're still going to, of course, stick with their own thing, but still looking at the potential of that further cut. And, I think it was like 176 to 178. I know it's kind of a larger uh a certain pretty good sizable difference when it comes to calculating yields and putting that in with the production in totality. But I mean, just some balance sheet considerations for that upcoming September WASDE kind of is implying that, if even if the USDA doesn't come down as far as pro farmer, you're still looking at, an additional cut in that and a stocks to use percentage getting, further below that 10% area. And, it's hard to say what soybeans are going to be. They might just stick with the 52.7. Hard to say there, especially when pro farmers coming in with yields that are above what they're currently saying. But sticking with that pro farmer number, you're talking sub 9% on stocks use ratio if you don't really account for demand. I know I had to kind of adjust the demand already for that. Otherwise, it was going to get us down to like, I don't know, a carry out of 1 billion bushels, which, demand's going to, or prices are going to ration that before it gets down that low.
Right. Yeah. No, I think yeah. Looking at just the pro farmer numbers at face value, that is very curious. And then yeah, I mean, I think I agree with you. Such a big cut we had from July to August. I'd be really surprised if they would cut another big whack 2 months in a row. So maybe some fine tuning down depending on what they find. We don't know what they're going to find, right? I mean, do they find more acres? Do they not find the yield problems that Pro Farmer found? Those types of things. So, yeah, very dynamic. Again, I don't think I can stress enough how pivotal I think that September 11th was could be.
I was to say that was going to be my question. I mean, is it going to be, does it have the potential to be a market mover, or is it going to be a little bit quieter because we have the quarterly stocks report at the end of September? I mean, pick your poison there if, in terms of, what you think the market's going to be more focused on.
Quarterly stocks definitely matter. I mean that end of the year, you know, inventory tally has undoubtedly, moved the markets before. Um, the USDA says, that's when everything's kind of reconciled, and was it there, was it not, that type of thing. I mean, yeah, that's going to be big, but I really think, I think for this, I think first you got to get through that September WASDE. I think it's going to be extremely pivotal on, you know, is this move that we're seeing over the past, basically 2 weeks at this point. I mean, is this sustainable? Does the USDA agree that yield is coming dramatically down and demand staying very, all those types of things, and supplies getting very tight in this demand environment? Or do they not find that, and it causes a little bit of washout? So, at least in the shorter term. We talked last week about how things longer term are very supportive, but I think the September WASDE, I think, is going to be pivotal for the next, call it, month or two or maybe three of trade.
Yeah, definitely some things to keep in consideration in terms of, why watching the conditions matter, why watching the Pro Farmer Tour matters is that it just kind of raises more question in terms of what the USDA can come in with later. The other big news, of course, came in on Friday, was talking or was like sifting through the news, I think, after, um, the day had quieted down. And then all of a sudden we go and see that President Trump made another Truth Social tweeting about beef. The last time this happened was a pretty wild day in terms of wanting to lower beef prices. And, it's an election year and he's still trying to do that. So on Friday, President Trump did announce a 90-day tariff suspension on ground beef imports for up to 3,000 metric tons. The move does, of course, aim to lower beef prices at the retail counter for consumers. And additionally, the White House does, or he's saying that the White House will commit to having that imported beef being sold 25% below the current market rate. So really trying to have those prices come down for consumers. So it wasn't disclosed as to where those additional tons will come from, if they're going to be working with some specific countries. I know they're already doing some preferential treatment for Argentina, back in February, but not a lot of details were really announced for that. So, the interesting part about this is, as our fed cattle supplies have been declining. That's also been reducing lean beef supplies. Our cattle slaughter has declined dramatically over the past few years, just in terms of, that liquidation cycle has kind of been reaching a peak, I guess. And then as a consequence of that, we're already having record beef imports. It happened in 2024, 2025, and it's still expected to happen in 2026. So I don't know. Do you think this is going to have much of an impact, or is this just kind of something that we have to see, or just a wait and see moment again?
I think it's I think it has zero impact. I think we were already on pace to scoop up as much beef as we could possibly scoop up. Yes, it's going to make it a little bit cheaper for importers, which make it a sliver cheaper for, at the retail level. But from looking at your chart here, we've been scooping up over the past handful of years as much beef as humanly possible. The forecast you put in there on this, for 26, to put that in context for the people, that's just kind of where we're forecast, without any sort of tariff reduction boost. So it's still, we're on pace for still a very large amount of imported beef. And me and you have been talking for quite some time. At some point here, all that low hanging fruit around the globe is going to be gone. We've seen some evidence of that to some extent. And so what's really going to be the next bullish catalyst is, you've got this plus 6 million pounds to be imported. What happens if we miss? What happens if that misses? What happens if that's just not out there? What happens if, even with these tariff relief deals, in most of these countries, it still becomes more expensive to import this product. Um, at some point, we're going to scoop up everything's out there that's kind of laying around to be sold, and other countries are going to start demanding a higher price.
Yeah, and something else that we've been watching closely for some time now is, of course, back in January, China did implement a tariff rate quota on pretty much every country's. They even have one on us, but we're not even importing to a degree where we would even hit that. But who is hitting that is, of course, Brazil, Australia. and Argentina's been creeping up there too because they've been exporting more to them. And I've always had the idea that could push more supplies here to the US because, if they still have the product, we've of course been a reliable importer of those countries specifically. I mean, Argentinian exports to the US have more than doubled over the past year with what we've seen for this 2026 cycle. We're up considerably from Brazil. We're still up higher year over year in Australia. The only thing that was interested is that, and you mentioned the low-hanging fruit, is that Canada, who we also get a bunch of beef from, not up year over year. And
Mhm.
so to your point, I mean, they're already probably a little bit further along in their expansion cycle than we are here in the US. And so yeah, I mean that comes to the degree of can we reliably get those supplies that the USDA says we're going to get for this upcoming season, or do we have to work a little bit harder from it? And ultimately that does keep prices higher moving forward.
I think that's the risk we run here. I mean, the market has been relatively comfortable trudging along because of the ability to import some of this beef. The risk here is a reversion to the mean, right? Or a miss on what's expected. That I think that's the risk, honestly.
Yeah. Again, it comes back to the fact of does what we have here in the US, is that enough to help keep things moving along? Again, mentioning the lean beef supplies is that, our cattle have been grading higher, considerably higher than a year ago. And that has a lot to do with just limited supplies. Packers have been trying to slow down. That means longer days on feed, and so that means more animals are going to be fed longer and getting up to those choice and prime gradings. We've seen a large increase in prime gradings compared to just the past couple of years ago. And then select gradings have declined dramatically. Now things are recovering, and I think a lot of that has to do with just, seasonality. And so we'll kind of see how things shape up there to be there. But at the same time, lean beef supplies have been at some lower levels, and can we see that increase? If it doesn't, we're going to need the beef imports.
I would venture to say it's not going to.
Yeah,
I mean, just given where we've been, given the amount of cattle we have on feed, um, I think what's there for the most part is going to be the good stuff. And so, yeah, we're going to need these imports.
yeah. But talking about what we have on feed, what we can get on feed, of course, today's August 26th. On Monday, August 24th, what we did have the official reopening of the southern border with Mexico to get cattle imports from them again. And the USDA on Monday did come out with some official estimates as to how much cattle they think Mexico could export through the rest of this year and into 2027. Not much is essentially what they're saying. And this is a phased reopening. They're starting with that Douglas, Arizona plant. And then Secretary Brooke Rollins said on Monday that a couple New Mexico ports will reopen as well. One being 30 days from now, or I guess 28 days from now. And then after that, another 30 days, another one will reopen. So again, this is a phased reopening. They're reopening ports that are the furthest away from, where a lot of these screwworm infections have been happening, especially down in Texas and, across the board from Texas. And USDA came in saying that Mexico could export 45,000 head by the end of this year. And then through 2027, they can export up to 150,000 head. And, over the past few years, we've seen our exports declined dramatically. We're down 76% year over year on just feeder cattle imports alone. So we're missing about a million or over a million of what we usually import. And so, yeah, the idea is can we recover? And, even with these numbers, we can see that it's still going to be a slow
Yeah.
recovery.
So go back to that previous chart. I like these two charts here for the topic we're talking about. I think it really depicts the tightness and really what's going on. We had the last kettle on feed we had, so the kettle on feed, as of August 1. So basically, that July number, a huge miss on placed cattle, huge miss by the market on what was actually placed out there in feedlots. This chart shows why. There's just we obviously don't have the feeder cattle domestically, and we haven't imported them for like 6 or 7 months to any degree to keep our feedlot levels um, elevated anywhere near where they need to be. So I love this graph for that. It kind of depicts where that cattle on feed miss came from. And then you go to your next chart, and we start talking about, well, these ports are starting to, are going to be reopened, and we're going to have this, a bunch of these feeder cattle come in. Boy, I mean, if you take the USDA numbers of what they're projecting to import, it's still dismal. It's still very, very, very dismal as far as what we're going to get into the country, and that's using the USDA projection numbers. And so that's whether that actually comes to fruition or not is yet to be seen. So both government efforts to try to drive down beef prices, in my opinion, not helping in the
Yeah.
long term.
Yeah, I mean the market, doesn't it need to sort itself out? And the Trump administration really hasn't, given it the opportunity to do so. With all these interventions that, I mean, can you even really call them interventions because they really haven't? It really hasn't been much that it's done.
There are attempted,
Yeah.
interventions and whatever. I mean, it's just that the supply and the demand situation is what it is, and you really have to let the market incentivize what it needs to incentivize without manipulating it, and eventually it will correct. And so anyway, I just don't feel like uh, yeah, I mean, I'm all for actually the border getting reopened. I think having the border closed, I think, is not
Mhm.
good for American feedlots, not good for American processing. None of that. I'm not saying I don't want that open. I'm just saying, like, even with it open and what we're projecting over the next year and a half, essentially, it's just barely going to move the needle on available supplies. So
Yeah, I mean, anything that we should really be thinking of moving forward with this in terms of, just the market reaction right now. I know we were already heading lower before all these announcements, but this, I guess, would be considered bearish news. Is there anything that we got to be really thinking about here, or is it just kind of business as usual that we've been talking about for the past couple of weeks and just making sure that you have some sort of protection in?
we've come out of the July 4th time period, kind of more into this bearish seasonal. Um, yeah, I think if you had some protection on long ago and left it on, those were looking great. If you don't have anything on today, um, I would personally look for brighter days ahead. Just with certain things that I'm seeing in the market, I think we can make it through this bearish seasonal, and I think things could turn around heading into that next holiday season.
All right. Definitely some considerations to think about on the cattle side, as well as again on that grain side. Going to be targeting, just the developments that we see over these next few weeks leading up again to that September 11 WASDE. Maybe some late season fireworks there for something to watch out for in terms of, looking at those balance sheets. The global balance sheet has been getting more into focus. Of course, the US balance sheet here in the US has been largely in focus in terms of that new crop demand numbers and how they're, seem to be offsetting a lot of what we was expected to be produced, as well as the potential of lower production moving forward. So lots to be thinking about. Appreciate all that again for this week, Nick, and we'll end it right there. Again, I'm Dawson Schmidt,
And I'm Nick Lawrence.
and this has been Commodity Chat from Trader PhD.